David, it's not lost on anyone that it is the third week of August. I'm wondering what you attribute low volume to the direction of the market this week and what sort of role that's played in what we've seen.
Well, I'm not sure if volume means much of anything. It comes and goes. I think when we talk about volatility, it's really code word for the market going down, and we haven't had that in a while. But I think the market's riding on the negative news or the fact that the economy is slowing down and doesn't look as strong as it was maybe 2 weeks ago. I think the market will be fine as long as the economy stays soft. Once the economy gets strong, and I think it will eventually, and the Fed starts to back off, then there'll be a problem for the market. The market is living on the Fed. It's been doing that since 2010. And it's doing it now, and it just so happens that these COVID stocks continue to go up, and the Dow's trying to break through. Dow, to me, represents the rest of the economy, and I think it will. The Dow's trying to get there, but it's fighting the fact that the economy is just not getting back. And I think you heard, Biden last night saying this virus is going to be around for a long time. That means buy the FAANG stocks and sell everything else.
David, I'm curious about your argument that when the economy gets good, the market will go down. I mean, the Fed has said that it's not going to be raising interest rates essentially until 2022. So what sense are you getting that that's going to change?
Well, I think it's really the sentiment change. Was it 2.5 years ago, we had that year-end sell-off because the Fed was suddenly on autopilot. And actually, I was on CNBC. I think it was Christmas Eve when the market, made its low. And I think we're on this run now. It doesn't mean the market's going to go down, but the market will, shift its leadership, and it's trying to do that. But it just does not have enough positive economic signals. If we get the vaccine news has been okay, not great. Economic news has been okay, not great. And the market's saying, okay, keep buying the names that have been winners. I mean, Scott Black, was just on the show here. He made great points about valuation and about the speculative nature of it, but it's going to continue until you give me something else that I can buy that other than what's been working, and that will change when the economy gets stronger and the Fed backs off, or at least thinks they're going to back off.
Nancy, where do you stand on that? Do you think better economic news is bad for the equity market?
No, I actually would probably disagree with that. I mean, I think you just have to be positioned differently. We still think that this is a stair step. Yes,
Go ahead, Nancy. I'm sorry. Don't know who you're hearing, but go ahead.
I'm sorry. Yeah. OK, I'm picking up something from transmission. Anyway, we think this is a stair-step recovery kind of a market and economy. And consequently, we think growth will be a little scarcer than some expect going into 2021. So we still do want to own growth at a reasonable price. We want to be overweight technology because we've said repeatedly, if tech doesn't work, nothing works. And it's permeated throughout every industry. So we continue to move toward attractive names that are high-quality companies with great balance sheets. Nothing really super innovative here, but it's really driven our portfolios positively for the year because we've been able to pick off some of those lower. We've been able to get rid of the lower quality companies and put in place much higher quality companies on sale. And that was, during the first half of the year. And now we're still seeing some of those names come through. So it's been a really exhausting market to navigate, Wilf, because it's something we've never seen before. And I've been doing this a long time.
Let's talk about some industrial names, too. Shares of Deere hitting all-time highs after beating earnings estimates and raising its full-year outlook. The company is seeing strong demand for small tractors, driven in part by an increase in home projects during the pandemic. Deere also making strides in its smart industrial strategy as farmers begin adopting new technology. The company even creating a chief technology officer role earlier this year to further this initiative. David, we thought that there were not going to be capital investments made during this period, that the farm economy was suffering and there had been an aid program specifically for farmers unveiled. But what does the Deere story tell you about that part of the economy?
Well, I think it tells you what the future is. They're telling you that when the economy gets better and it's starting to get better, they're going to have a tremendous run in profits. I'm not predicting the stock to anywhere to what's the stock going to do, but I think there is just tremendous amount of pent-up demand in non-tech businesses. And I think that's it. We're all sitting here, and the market is the only place that people can go until then. So the people that are making money, they're not traveling, they're not, spending it in a big way, they're saving it. And once they get released from lockdown in a real sense, there's going to be a tremendous boom in the economy away from tech. And that's why I think this reversal or this switch that we're starting to see in the economy, the weather is changing. And the question now is, how much longer are these tech stocks going to be booming before people realize that it's not, that's not where the action's going to be the next couple of years?